287 to 291 here, and here are some facts given that are relevant to all of this. The time we have is 18 minutes. I have already written down the facts from this question and what are the different asks from this question. Probably gathering this information and understanding what is the ask is a 5 minutes thing, 5 to 6 million minutes thing, and that is important that we spend enough time understanding all of this thing. And then the questions are really simple here. So on 1st April 17, our company acquired 116 million of B company. B company is 145 shares. So what percentage they have acquired? They have acquired 116 of 145. Okay. So this is what percentage. Although the question is not given directly, but we can see that 80%. Our company has acquired 80%. Then there is cash payment of 210 million, and they have also issued equity. What they have issued? Not equity. They have issued at par 10% loan for every 200 shares. Okay, so this is what they have given. Okay, let's look at, yeah. Okay, let's look at the facts. Then there is a property with B at the date of acquisition. This is at the date of acquisition. Hmm? This is the date of acquisition. On this date, the carrying value of one property with B is 62 million, then its fair value is 82 million, and remaining life is 20. And on this date, and the equity date of the acquisition intangible, they have some intangible worth 25 million, and then its life is 10 years. And there is I mean, R, I mean, in their inventory at this period, R had sold 56 million of inventory, and the markup is on 40% on cost. So the cost will be 40 million, right? And how we can, this is not given in the question, this we have calculated. And how we can calculate is if the selling price and cost we can take, okay, cost price. Suppose our cost is 40, and because we have 40% markup, our selling price will be 140. And then they are asking 56 million. So when our selling price is 150, our cost price is 100. When our selling price will be 56, we will do a cross calculation here. It will be 40 million. Okay, so that's 40 million here we are taking. So 40 million will be market, and 16 million is the unrealized profit, we can say here. 16 million will be the uh, unrealized, will be 16 million. Okay. Now let's see different asks. So in question number 287, what they are asking is total amount of consideration transferred. How much consideration they have given? They have paid cash. Okay, that we have already seen. And cash, and then what? Mm, they have given cash and note that we discussed 10 million. So how much of cash they have given? We read in the question 116 million of cash is there. 116 million of cash, and then a note. So 10% note for every 200 share of 100, 10% $100 note. The note is dollar 100. Okay, this is what they have given. Maybe we can copy it and put it here, and then we can just type in the things on question 2. Okay, so they have paid cash payment of 200 and cash payment of 210 million. Okay, that's why it is important to see things rightly. Cash payment of 210, and then 100% loan note for every 200 shares. Okay, for every 200 shares. So what we will do, how much they have acquired? 116 million, right? 160 million of shares, and for each two, hmm, they are giving one, and so for each two, the 160 million multiplied by this, they are giving one, and it is how much is the amount? So every 200 shares, sorry, not two. Every 200 shares they are giving one. So they are giving this much, and then the price per note is 100, the list price. So this is 58. Okay. So how much of consideration they are paying? They are paying 62 million. 268 million of consideration. So our answer should be 268 million. 288. What will be the amount of the adjustment to group retained earnings? So group retained earnings, what will be the impact? Okay. Let's do this. So here is like we can reproduce these things. This carrying amount of property and then the intangible. Maybe we need to include some rows here. We'll keep this one here. Okay. So we already had this information. We can copy this, paste it here. So what it is saying is carrying amount of the property on this date was 16 million, 62 million. Then there is fair value at 20. So what will happen? The depreciation charge here will be how much? But there is one thing to notice about the dates here, which are like this is the date of acquisition, and the question that we are looking at, that is 31st March 19, which is 2 years from the acquisition date. Okay, so we need to do this calculation for 2 years. So what is the difference here? Hmm? Fair value adjustment. How much is the fair value difference? So from 82 million to 62 million, 20 million. Okay, every year charge will be how much? This divided by 20. So every year they will have 1 million of depreciation, but because the calculation that we are doing is at 31st March 19, which is 2 years from the acquisition. We will multiply this by 2 as well. So 2 million for this asset, and then there is this intangible. So same way, like the depreciation will be, or the amortization will be 25 million divided by 10, 2.5, but this 2.5 is for 1 year, we will take for 2 years. Okay. So on the equity, total will be 7 million. All right. But then our ownership is how much? 85% only, that we saw earlier, that they acquired 116 million, right? Uh, they have acquired 116 million of 145. So 116 divided 140 is 80%. So 80% they have acquired. Okay. So 7 million of 80% of 7 million we will take by this amount, by 5.6 million. By 5.6 million, the retained earning will go down because of the share of depreciation and amortization for the 2 years. So it will reduce by 5.6 million. So the answer will be the third one. For 288, the third option will be the answer, 5.6 million. Then there is 289 where they are asking about the unrealized profit. Okay, that is the next. So we already see in the question that this we have already calculated actually. Hmm? So we saw that 56 million was the inventory that was sold at selling price. The selling price is 56 million and the markup was on 40% on cost. So the cost is 40 million, and then the unrealized profit will be 16 million, because we are reporting everything in millions. We will just type 16 here for 289. Okay. Our answer will be 16. So maybe we can get rid of this things. So yeah, so 16 million will be our answer. Uh, that was okay. Unrealized profit. Then they are asking for the JE. What JE we do? So what we do is we do a debit. What we debit cost of sales for unrealized profit, and then we credit inventory. Okay, this will be our debit. Okay, maybe you can use this, and then this will be our credit. Okay, so this will be the entry. So debit cost of sales and credit inventory. Okay, debit cost of sales, credit inventory, that will be the answer. For unrealized profit, this is the general entry that we passed. We increase the cost of sales and we decrease the inventory. Okay, then 291 is I already have this answer. When can a subsidiary be excluded from consolidation? Okay. So when can you actually, so these are the four options given. Okay. So they are asking when can you exclude uh, a subsidiary from consolidation. So the first one is the activities of subsidiary are significantly different. No. Hmm. That is not the case when your subsidiary, even if it is different. No. So first one is incorrect. No. Controls of the subsidiary has been lost. Yes. If control is lost, then you will exclude it. Control of the subsidiary only intended to be temporary. Even if it is temporary, you will consolidate it. Okay. In this case also, you have to consolidate it. Here also, you have to consolidate. And then the subsidiary operates under long-term restrictions which prevent it from transferring. Even if you are not able to transfer fund, even if the subsidiary is not able to transfer the fund to the parent, still you will consolidate it. Okay, so only in this case, do not consolidate. If you have lost the control, hmm, you will not consolidate it. So our answer will be the second one. Okay, 291 second one.